Okay, so hello everybody. This is Seth Melamed. I'm COO of Liquid Group, and we're joined this evening here in Japan, and it's morning in New York, and we're joined with Ophelia Snyder, who is the president and co-founder of the AMUN Group. Hi, Ophelia.
Hi.
How are you?
Hi, I'm very well. Thanks. Yourself?
Doing great. I'm really excited we could do this. It's really interesting products that are being introduced to the crypto industry, and I can't think of a better person to tell us about what the AMUN products are. We've recently listed 4 of them on Liquid, and we'll get into that later. But first, if you could just tell us a little bit about the background of yourself and how you got into crypto.
Yeah, absolutely. I have a fairly, I think, unconventional story of how I ended up in crypto. My background was originally in, the traditional finance world. I was doing M&A and structured products. My transition to crypto actually came because of my interest in financial infrastructure, like the plumbing that makes our financial world work. One of the things that I found out, I guess now several years ago, I started following crypto in, I guess, about 2013, on the back of learning how much manual process exists in our traditional banking infrastructure, and how much like human beings typing things into spreadsheets is how our world works, which is actually quite terrifying if you think about the amount of money that's going through it. And crypto seemed like a natural extension of an easier way to do this, an easier way to manage financial infrastructure, an easier way to do simple things like money transfers, and just a much cleaner setup. And that's how I got interested in crypto. This very sort of infrastructurally driven intellectual curiosity. And that's really how I got started, and the company got started because crypto can be really difficult to manage for most people in a variety of different ways. The company has really 2 portions to it. We also have a regulated business. We really set out to make crypto more accessible to people.
Right.
And originally that was focused on listing products in traditional markets. Now it's more focused on making some of these advanced functionalities of crypto trading available in simpler formats and easier to use formats for people.
Right. Yeah, absolutely. Crypto has great appeal. It's in some ways it's like the New York Times. It's free from the fear of prejudice and judgment. It's ruled by mathematics and algorithms, and it removes a lot of the human elements of finance, and that's one of the appeals for me as well. One of the reasons why I got into it. Can you tell us about the first time you ever actually received or sent any Bitcoin?
Yeah, would have been about 2013. So this is this is a bit of a strange story as well, but as a concept, crypto was introduced to me through a class in university. We were looking at, I went to Stanford undergrad, and we were looking at disruptive tech, because the very Stanford-y thing to do. And it was basically a class on how do you think the world is going to break? And someone brought in crypto, which I was like, this is really interesting, and got my interest started in the space. And shortly thereafter, I bought my first Bitcoin.
Nice.
Yeah. So it came from a very intellectual curiosity place. But interestingly, of that group of people, the person who brought that topic into that class is actually the person who introduced me to my co-founder.
Okay. So when you started with your co-founder, what was the big problem you were trying to solve?
Accessibility. Our company really is all about crypto made easy in whatever form that takes. So for people who don't feel comfortable with necessarily crypto infrastructure, getting them access to the space. For people who are comfortable with crypto infrastructure, getting them access to advanced functionality without needing to get into all of the weeds on managing positions and all of the technical infrastructure that comes along with that. So it's always about making crypto as easy as possible.
Mm-hmm. Mm-hmm. Yeah, absolutely. So I think we'll go into more of those details when we get into the mechanics. So one of the first questions that came up from, we gathered about, I think we received about 400 some odd questions from our communities when we were announcing that we were going to do this AMA. And so I wanted to share some of the questions from that we got from various social media channels and emails. So one of them is about the mechanics of the pricing of the tokens. And the question is from Sung-Wook Kang, who I think is from Korea. The question is, how are the price of tokens decided, both the initial listing price and the current market price?
So the initial price is basically just set. You can pick what it is. And from there, you attribute to that value a certain amount of Bitcoin. So in this case, or a certain amount of Ethereum, depending on the product you're looking at, on a notional basis. So $10,000 multiplied by, in this case, 3 divided by the price of Bitcoin is essentially how you start the product. And what that 10,000 is, could be any number you want it to be. It'll just affect the amount of Bitcoin that's tied to it. Once that starts, day over day, the price is determined by a multiple of the change in price, essentially. So if crypto, if Bitcoin moved 5%, the token will move 15%. So the percent change in the price times your leverage level. And it's really quite that simple. And then it obviously compounds because the next day you're starting off of whatever yesterday's price was. That's essentially how the pricing mechanism works.
Right. And what about, so a key part of this mechanism of the leverage tokens is the rebalancing. So we have a question from rjrramesh.ntpt. And the question is, can you describe how the rebalancing works for leverage tokens?
Sure. So I'd actually like to take one step back, and we should talk first about why these tokens need to rebalance. It's fairly, I think, straightforward if you think about it conceptually. So in the example we just talked about, the price of the tokens is moving, but the amount of Bitcoin that's associated with it isn't. The issue with that is that over time, that will cause you to move away from having a 3x leverage level, right? Because the amount of Bitcoin that you're considering as attributable to that product now may not actually represent the full value. It's not necessarily 3 times the price anymore. And that causes issues where you're no longer going to have the right leverage level. So the rebalancing essentially resets you to the leverage level such that you're actually at 3x. And that's really important because if you don't do it, and for example, Bitcoin goes on a tear, your 3x leverage position is going to start eroding significantly, and you're not going to get the exposure that you're actually looking for.
Right.
So the way it works is basically at a specific time, you're looking at resetting that value so that these two things are in line with each other. Now, one of the big issues that has come out of this is front running. I think that's been talked about a lot with the FTX tokens, right? Because you know what time that is going to happen, and therefore people can put trades. One of the things that we built into our rebalance process is not only a smart order routing system, so it's actually looking at multiple exchanges across the industry, figuring out where, what the best price is currently, and that's where it's sourcing from. It also allows you to not have people front run trades in the same way because they don't necessarily know where they're going to be executed. Right. Because they don't necessarily, it would be impossible to tell how much is going to which exchange, or even which exchanges it will be executed on until after the fact. Right. And that's part of the benefits of the way our rebalancing process is structured, is that the price that we use to calculate those new Bitcoin levels is actually based on real exchange data, but it's not integrated with our own proprietary exchange. So that's, for example, the way FTX works, right? So their trades always execute on FTX at a specific time. Right. It makes it really easy to do things like put a trade right beforehand, for example. Right.
Yeah. So it's kind of like a decentralized hedging mechanism that prevents the leverage token holders from potentially being front run by smart market operators that know what the rebalancing is going to occur.
Exactly. And so we look at a variety of different exchanges, and we look at both sort of, what prevailing prices are, what the funding rates are, what it's going to cost to execute there, and find sort of the best and cheapest way to do that.
Sure. Wonderful. Investor protections. Being client-centric is usually the best long-term strategy, and I really appreciate how you guys taken that approach.
Thank you. We we worked pretty hard on it. It took quite a bit of design effort to make sure that we were creating a hedging mechanism through our system called Jasper to make sure that this was as robust as humanly possible.
So next question is for myself, because I'm always interested in this. As we've seen the growth of stablecoins and these new types of leverage tokens and ETPs, tell us a little bit about, and for full disclosure, I tried this myself today, but tell us a little bit about the redemption and issuance of the leverage tokens and how that works.
Sure. So the products can be minted and burned at request. So basically you log into our portal and you go through KYC, and anyone can actually act in making their own token. And so you go in and it will basically give you a price, and you transfer stablecoin into the contract. The contract then does a bunch of stuff, executes all of these hedges, and will send you a newly made, BTC3L, BTC3S token. There are a number of benefits to doing it that way. There are a number of benefits to sort of allowing that open architecture. The reason that it is open in this way is it actually promotes greater liquidity for the ecosystem and opens up a really interesting arbitrage opportunity for token holders, and not just designated market makers as token holders, anyone. So anyone can come in and basically mint or burn these tokens. That way you can control them yourself, or you can actually then bring them onto an exchange and trade them. And the logic for that is you can actually get potentially some price discrepancies, right? So there's a spread, and I think most people who trade in crypto are probably pretty aware of that. Like, there are bid-ask spreads, and you can actually capture some of that because we'll give you the product at potentially at a midpoint, or there can be trading anomalies or discrepancies between different markets, and it actually allows you to take a look and basically price shop to find the place where you can purchase these tokens for the least amount of money, and in doing so actually promote liquidity. And so it works in both directions, where you can actually create your own token or you can destroy it.
Right. So based on, full disclosure, we had done a preparation call the other night, and I asked the question of, if you were, for instance, you were holding the BTC3L token and you wanted to capture your gains, I guess my question would be, well, should I redeem that token, or should I sell it based on the order book? And I guess the answer depends where you can get the best pricing. And is that an example of where there might be an arbitrage opportunity where the order book prices are not as good as they should be? So I would just go directly and redeem it at the AMUN website, and maybe,
Exactly.
yeah.
Exactly. So for example, if you had like a lower price, you're looking to sell out of a position, and you have a lower price on an exchange versus on our platform, you could actually come to transfer it off of the exchange and burn the token yourself and get stablecoin back for that.
Right.
The interesting thing there would be, I would actually take it a step further. That's a situation where you might even want to look at doing that as a strategy, right? There's actually a strategy there where if the purchase price is below the burn price on the platform, you're actually incentivized to go out, buy it, and burn it. And that's a market dynamic that we actually really want.
Right.
It promotes better liquidity for the community. It promotes a more robust ecosystem. And the whole idea here is that you can actually do those kinds of things.
Right.
And that we would actually strongly encourage people to try that. and to see if that they can find those opportunities. Those opportunities can actually be quite lucrative if you can identify them.
Sure. And it overall, like you mentioned, it helps to promote overall liquidity of the entire ecosystem. When people do that more and more, and those spreads, I guess, over time should get narrower, right?
Exactly. It basically encourages everyone to act essentially as a form of market maker, where you
Right.
can come in and actually make a market in some of these things to help improve spreads, help improve liquidity, and quite frankly, make money while you do it.
Sure. So here's a really great question, because we touched on it earlier about the difference of the leverage tokens versus trading, say, on a margin or trading on a perp swap. So this is from Mikey M. Fuong 214. I didn't know there was 214. I wonder who 213 is. But the question is, what's the difference between the BTC3L or BTC3S tokens versus trading on margin or with 3x leverage?
So it's a few different things, actually. So the most obvious important one is you don't have to manage margin. So you're never in danger of a liquidation. That concept just doesn't exist.
Right.
We manage all of those elements and risks with a team that's experienced at doing them. You just hold the final product, and there's no reason to worry about those types of events, which obviously can happen pretty frequently in crypto if you get like a high volatility period. So the nice part is these are essentially tokens that don't require any maintenance from you to maintain those positions.
You mean no initial margin, no maintenance margin, no getting exited at a bankruptcy price, no margin calls?
None of that. None of that exists structurally. You basically just hold it, and then we sort of help you manage that margin as part of the product itself. That's one of sort of the big benefits of holding this way. You're also, so you're not exposed to those elements. These products also like book your gains and losses each day and reinvest them. So you'll never be in a position where you're in danger of liquidation on the downside, and you'll never be in a position where you wanted to be 3x levered and you've been taking these gains and your margin is growing because you're getting paid, but it essentially means that the position as a whole is eroding in terms of its leverage level, right? Because if you had $100 and you get paid $100, those $200 are no longer levered. And so it actually helps you maintain a consistent exposure to the leverage level that you want.
Right. Makes total sense. So if you want to maintain a 3x leverage level, the rebalancing helps you to maintain that as the underlying price goes up.
Exactly. While making sure that you don't have to deal with any of the actual management of margin, or that you're ever actually in danger of a liquidation, which would obviously be on the, the price is moving against you side. So both on the price is moving with you, it's all about, making sure you're keeping that leverage level where you want it, so you're actually capturing those increases. And on the downside, it's protecting you from, exposure to bankruptcy prices or having to actually deal with remargining your positions.
Sure. So next question is from Jay Glemy, 95. The question is, my understanding is that these tokens, leverage tokens, are best traded on short term with a hunch on direction, but it is not for hodlers.
So I think it's really important to understand what these tokens actually do. And I alluded to it earlier, right? You're booking your daily gains and losses, which basically means that you're exposed to the 1 day change in price. This isn't the same thing as I'm going to open a margin position and it's just going to run forever with the same amount of Bitcoin I'm exposed to forever. Now, the downside of doing that is what we just talked about, right? You're in danger of liquidations if it goes too far one way. You're not actually leveraging your full position if it goes well. But the reality of that is it basically means you're taking those 1 day gains and losses. And so can you hold these for longer? You can, but it is something to be aware of, where you need to realize that those gains and losses are coming on a daily basis. That's why we think about it in those terms. So they're very effective tools for traders if you're going to, hold them longer term. You just need to be aware of the fact that you're exposed to that daily price volatility. It's not a long-term open-ended position.
Right.
And so it could behave differently in your portfolio than maybe what you intended.
So next question was from Pan Patanjali at centrum.cz. Question is, why did you choose for transactions for minting and burning on AMUN's platform USDC over other stablecoins? Actually, it's USDT, isn't it?
Yes. So we allow actually for both. So you can mint or burn tokens into USDC, especially for our BTC short product. Our leverage products mint in USDT. The reason for that is that's the prevailing structure of the underlying asset industry, right? So if you look at how you would hedge a futures position, most of those are going to be USDT denominated. And so for people to be able to see it on an apples to apples basis and actually be able to properly comparison shop what they want to buy, we wanted to make sure it was consistent with other ways in which you might get leverage in this industry. So to help people sort of deal with those elements, and we're obviously rolling out, we'll continue to roll out additional stablecoins over the next few months.
But would it be dependent on the actual derivatives using the stablecoins as the funding currencies?
So not necessarily, but in this case, so those things are not necessarily tied together. We don't have to do it that way. But one of the things in particular with the derivatives markets and crypto is that USDT isn't necessarily, it's not a true peg, right? There's not necessarily a way to redeem it for cash. One of the issues with that is that in certain periods of volatility, you can trade away from that, bang on a dollar value. And so there is a conversion there. And that's more the thought process is around how to best capture that for people that are looking to create in other types of stablecoins.
Makes sense. So I think we're coming to the part that a lot of people are very interested in because, we've come across at Liquid several different stablecoin iterations, some of which you've mentioned, some of which you haven't. And I think it's really in this universe of new products that are out there to understand what's different about the AMUN product. So without naming necessarily any names, will be politically correct here for a change. What are some of the differences or advantages specifically for the AMUN suite of products versus some of the other leverage tokens that are already out there trading?
So it's a combination of a couple of things. There's an element of essentially decentralization. So we're looking at a bunch of different exchanges instead of our own proprietary exchange. What that means is that you get the benefits of liquidity across a variety of different platforms. You get the benefits of best execution and what the best pricing is. You get the benefits of some optimizations around funding rates, and that actually puts you in a overall much stronger position in terms of what we're actually able to provide inside the guts of the product. You also get the benefits of this rebalancing without the possibility of the front running issues that we had talked about. While maintaining that consistent leverage level. So some of the other products in the space are designed to be within a leverage band, and they don't necessarily have that daily function. There are sort of pros and cons to that. You're not taking those daily gains and losses, which obviously affects what that return profile looks like, but it's also really hard to enter a product and not know what leverage level you're entering it at. And so that's part of it as well, is that, maintaining that consistent leverage mark without necessarily having, being constrained to execution on a single exchange or being constrained to hedging through a single exchange.
Got it. Okay. So next question is from Panda Lusu 66. Currently, one of the biggest issues in the industry is that of safety and security. So with the AMUN tokens, what do you do to ensure user safety and security?
Sure. It's a really good question. The AMUN tokens are developed and implemented by a team of highly skilled and experienced engineers with a proven track record in financial engineering and in blockchain development in particular. So it's really important to have the right team behind it. Additionally, the people who structured the financial part of this have backgrounds that are extremely robust in finance and in financial structuring. The smart contract that lies in the center of the products have been certified by top tier security audit companies and are being periodically audited. And lastly, we store all of the assets that could be tied to this product in some way in extremely secure ways, using cold storage, using robust platforms that are able to safeguard from things that maybe are not as pleasant that occasionally happen in our industry.
Right.
And so those are the big things. We rely on the experience of our team and a built infrastructure that was designed to take into account as many of the risks inherent in this industry as we possibly could.
Mm-hmm. Mm-hmm. Great. And I'm assuming as part of the product development process, you were able to do back testing under different market conditions. Is there sort of an investor profile where using a leverage token is better versus trading on margin or trading with a perpetual swap? Is there a certain type of asset class or type of trader that that this will stand up under market conditions?
Sure. So I think the market conditions question is an interesting one. We've obviously gone back and back tested and done a lot of this. And what you can see is that basically it comes down to that one-day concept, right? So the difference between something like margin or a perpetual swap is going to be the type of person who would maybe feel comfortable using those types of products or have all of the accounts with those types of things set up and be engaged at the level where they're actively handling their various obligations under those types of contracts. That's a very specific kind of profile and a specific kind of person, a specific kind of technical user. These products actually let you have a lot of those similar features, but on spot markets. So it's much more straightforward to use, and it doesn't have any of those management requirements.
Right.
So in terms of profile, this is really about ease of use.
Right.
So this is an easier solution for people versus some of these derivative markets.
Right.
In terms of market performance profile, the benefit, I mean, you really see the benefit of this versus something like a perpetual or margin trading when the market's moving in the direction that you think it is, right? So you're going to see, because you're taking those daily gains and you're essentially reinvesting them and re-leveraging them, you're actually able to see some acceleration there.
Got it.
The other thing that exists here is that you have what we call threshold rebalances, is that if you trip up certain triggers, the product will automatically start a new rebalancing within a period. So in an attempt to like stop runaway losses, or what would be the equivalent of a liquidation. So essentially taking off some of that leverage if it's moving against you, which would actually slow down the rate of decay of your position, right?
Interesting.
So if you're 3x levered at the beginning and something is going against you, you're going to see that leverage number tick up as your margin erodes, right? That's structurally how a normal derivative market would work. In this case, that will start, and then you're going to hit certain thresholds that are going to cause that leverage level to be put back in line with that 3x, so that you don't get that same runaway effect.
Right. No, that's very interesting. I'll just share as running Liquid and seeing a lot of our margin traders and some of the problems. I really think this solves the issues. So the problems that we see is that even when we present with our traders with pre-trade risk management tools, there's sort of this tendency to under under margin their trades, and even with warnings, they may not anticipate that the volatility in this market could lead to a margin call and then a liquidation, and a lot of people get wiped out. And what I'm really liking about this product is that for people that are, not as familiar with the mechanics and of the margin requirements, that this is a much safer product for them to express their views on the market without fear of sort of unexpected outcomes.
Exactly. Like that's the whole point. We're trying to limit the bet you're making is the bet you're making. You're not exposed to necessarily these other elements. It's the bet you're making for that 1 day period, and then you're going to take your gains and losses, and then we do what we can to sort of help avoid some of that runaway on the downside. But exactly, the idea here is that what you are trying to express is what you are actually getting, as opposed to potentially having a position explode for some reason.
Right. Okay, so let's talk about what's next for in your roadmap. So one of the questions we got here is from Rompo007. Do you have any plans to introduce higher leverage tokens like 10x?
So the short answer is potentially. We're always looking to expand our product suite, both in terms of potentially building these products on other assets, so not just Bitcoin and ETH, and also potentially exploring other leverage levels. I imagine that's a somewhat unsatisfactory answer where I'm not giving you a yes or a no, but it really depends on demand from the community and what we see, I think, and what we think can actually be managed safely, which is the other question, right? We don't want people to be in positions where something is behaving unexpectedly.
Right.
And so part of that is making sure that we can do that in a way that's safe and puts our users first. And so the answer is it sort of depends.
Makes sense. So this is a question from Mason827. Are there any plans to implement elements of decentralized finance, DeFi, into your leveraged tokens?
So we've talked about that a bit, right? So a good chunk of this infrastructure is somewhat decentralized, and we're constantly pushing to add more to allow the products to be more decentralized and reduce sort of the amount of risk that you carry as a result of that centralization. Part of that is the smart order routing. Part of that is, this open mint burn function, and we're constantly looking to add more.
Great. Okay. One more question about roadmap. When will there be, this is from Ben's Olfong, when will an inverse token roll out for ETH?
So right now, we obviously do E3S, which is a 3x levered short position. I think this question is maybe alluding to a 1x, just a simple a simple 1x, and that is something we will likely roll out at some point soon. Again, it depends a lot on interest from the community, so it's good to know that people are interested in it, and we're sort of always open to suggestions like that. But I think this one in particular is fairly likely, assuming you mean a 1x and not the 3x short, which is already out on the market.
Right. So next question, interesting, from Vladimir HF. Do you intend to list your tokens on any DEXs?
Potentially, yes. Again, roadmap questions are always so hard because it really does depend. I think the idea here is that with this like open mint burn function, you'd be able to promote that kind of liquidity, and that would be in keeping with continuing to decentralize some of the infrastructure. It's a question of demand and liquidity.
That's a tough one because the time for execution, the liquidity that's required, and the lack of certainty of execution price, I think it might be difficult, speaking as the CEO of a centralized exchange. Next question. Um, this is from Jayhoon3052, I think from Twitter. Thank you, Jayhoon, for the question. I tried to trade ETH3L on Liquid, but the order books currently aren't very deep, which made it hard for me to trade there. Do you have plans to add more liquidity? Good question.
So it is a good question. The products are still pretty new, so we've sort of touched on this. There's this sort of community-driven aspect of liquidity where the ecosystem should promote it over time. The answer in the short term is also yes. We work with our market makers to provide as much liquidity as we can to the markets ourselves and through these third parties. But a piece of this is also, the ecosystem is still fairly new and is growing. And that liquidity mechanism should ensure that those order books build out organically in a very nice way.
Right. As I'm just thinking about this, I think one of my jobs, I feel like at Liquid, is to figure out ways to help my clients make money. And because of the ability to redeem and issue new tokens, maybe pricing alerts when the order book presents traders with opportunities to maybe issue a token, then sell it, or buy a token on the order book and redeem it. Maybe that sort of pricing alert would be useful for our traders. Might be something we could think about developing internally.
Yeah, absolutely. We'd be happy to help set something like that up.
Cool. So next question. This is from Huang830-15142. Many projects within the industry have policies for their ambassadors to contribute to the community to help attract recognition for the project. Does the AMUN team have any plans to create such ambassador program?
So I don't think we have any short-term plans to do something like that for the time being. I think we're still focused on growing the community organically and helping people actually really understand our products. It's a big part of what we do is around education. So I think that's really where our focus lies for the time being. But I think a program like that is certainly something we would consider setting up in the future.
And finally, no AMA would be complete without sort of a random type of question from the community, which is, well, I'll spare their email address for their sake, but right now, would you buy BTC3S or BTC3L and why?
All right, so you're essentially asking me if I'm levered long or levered short as a market view. I think the pricing today is probably around 9,200 and change. I'm probably long today, given what market performance has been. So it's maybe an unsatisfactory answer, but I'm also sort of long-term long Bitcoin anyway. So right. I think I'm maybe a little bit biased there.
Got it. Great. Well, Ophelia, thank you so much for helping to explain to the community about the leveraged tokens. We're really excited to be partnering with you on this, and I think it's part of our strategy to create a more transparent and user-friendly platform. And we couldn't be happier to have these tokens trading on Liquid, and looking forward to great ability for people to express their views on the market.
Yeah, really excited about it, and this has been really fun.
Great. And we'll be announcing one of the lucky winners from this pool of questions. I don't know, are we supposed to announce it now, or is it going to come out on Twitter, or?
I think we announce it now. I think we're supposed to announce it now.
Okay.
We can maybe let the let the cat out of the bag early if we weren't supposed to.
Okay. I really like the question from Mason827@gmail.com. And the question was about, are there any plans to implement decentralized finance into the tokens? And so Mason827 is a winner of $100 worth of the USDE BTC3L.
Yay! I loved that question too, actually. I think it's a really important trend in our industry, and I think it's something we certainly on like the product team at AMUN spend a lot of time thinking about, how to sort of best implement those elements. And so I really loved that question as well.
Great. So Ophelia, please, next time you have some interesting products that you want to tell the trading community about, we'd be more than happy to have you back and tell the story.
Thanks. I would love to.
All righty. Good night.
Good night.